Hey guys, welcome back. In today's video, we are talking about AMC winning, Adam Aron's ace, the share buyback, and many more in this video. First, we're taking a look at this. I say the AMC price action begins to align with various indications and somewhat implicit commitments by CEO Adam from the past, telling at least to me he must have a pretty hefty ace up his sleeve all along. So what we've talked about in the past before, and Adam Aron has definitely been someone who's been very vocal on his messages, whether it's for himself or for the company. We've seen him drop various messages, whether it's I will win, whether it's checkmate, or on the future of operating AMC. And we've seen how he's already came true on a lot of the words that he's obviously said. He's proved himself to be an extremely good CEO. He's took AMC down the right path, and we are seeing this happening before our very eyes right now. And so why I understand how AMC is obviously doing extremely well, and it shouldn't be reflected by the price action of AMC. Because whilst I'm here saying that AMC is winning, you can see for the day we're down 3.33%. But I think a very important thing about AMC is that AMC's strength, AMC's future, shouldn't be dictated by its current price. The reason why I say that is obviously because of how manipulated the price of AMC is. When you take a look at this, 62% of AMC trades were off exchange. Let that sink in. Retail buys on lit exchanges equals visible demand. Hedges routed to dark pools equals hidden suppression. And so this is why the reason I say that you can't judge AMC based off of the prices showing on the market, because you can see here 62% of AMC volume was routed into the dark pool. That's over 13 million shares not being accounted for. So for a lot of those, for a majority of those volume, they are actually buy orders, in which we've shown in the data before, and it's the primary reason for why we never see AMC go up, despite the fact we are constantly seeing people buying into AMC. And so it's why I said that AMC's price does not dictate how well AMC is obviously doing. If you want to take a comparison at the two, you can see AMC versus Cinemark gem comparison. So if you take a look at the dark pool usage, and you can take a look at this for pretty much any time, but you can see at very important times for AMC, you can see here 73% for AMC was off exchange, but yet only 33% of Cinemark was off exchange. And so that's the difference in dark pool. What's even more important is that 30% of trades were in NYSE, but yet only 8% of trades were in NYSE for AMC. And so this is why we've said, when you take a look at the movie industry, you're seeing stocks like Cinemark, you're seeing stocks like IMAX going up. That itself is a reflection of confidence in the movie industry in terms of how well we are doing, in terms of the future projections we are looking at. But the reason why AMC don't go along with it is because we are faced with suppression that other stocks within the industry don't. And this is just a very clear example of this. And so this is how we said that we shouldn't judge AMC winning by its current price, but rather by the retaliation made by these short sellers. Because if these short sellers are not afraid of AMC, they are not stuck with AMC shares, they are not losing hundreds of millions of dollars, if not billions of dollars with AMC short, they wouldn't feel the need to suppress AMC and yet let all these other stocks go up and not face any suppression. And so that's why I say that we know that AMC is winning, why we know that Adam Aron obviously has a few tricks up his sleeve. But you can also see here, 3 hours of trading AMC at 290 to 291. Price fixing is illegal by all means, but the SEC is sleeping at the wheel. This barcode trading should have been investigated since the day of its inception with APE. So one thing you will notice is that despite AMC experiencing millions, if not tens of millions of volume every single day, you're constantly seeing it barcoding. And now we've talked about the barcoding in terms of this is how algorithms made by these institutions are used to manipulate the price of AMC, why they keep it at AMC at this low price. Now, there's a big reason for why they do it, because they are afraid of attracting investors, because they are afraid of AMC raising money. We've already talked about how deadly that is. We'll give an example later on as well about why shorts are obviously afraid of that. And so when you understand things like this and you take a look at the regulations who are obviously turning a blind eye, we talked about this multiple times in the past, you understand that this is obviously what's happening. You understand that constantly there are suppression. So wherever you look at past data or you look at the current data, what you will see is just the constant manipulation that's happening to AMC. And now going back to what I said earlier, AMC's success, AMC's actual trajectory should not be reflected by its current price, but rather by how much retaliation is shown by the short. And so whether it's the FTDs, whether it's the tokens, the dark pool, or the price fixing here, the barcode trading, these are all indications of that. And so we know that the shorts are panicking. Now, it's not a surprise that they're doing this, because what you can see here is Crunchyroll boss confirms Demon Slayer Infinity Castle won't be streaming in 2025. Go see it in the theater, because the theater is the only place you're going to be able to see this film in 2025. So for those of you who don't know, this Demon Slayer movie is one of the latest anime movie to be released, and it has done extremely well. And what we're seeing is that more and more of these anime movies are being released. Now, this isn't to say that if this is not your preferred, you should go watch it. Of course, that's not the case. But it's about saying just how well movie theaters are doing, because this Crunchyroll what is a platform that hosts these animes, essentially the Netflix, but for anime. However, despite that, they're still realizing that the opportunities is in theater. The very fact that this movie, which has already done extremely good numbers, is still only in theaters should already tell you the relevance of movie theaters. And so it's why we've said that AMC, along of course with the rest as well, they are going to do well. We are seeing the box office improving, and that's why the shorts see this as well, and that's how and why they constantly suppress AMC. And then you can see here, breaking, investors speculate Ryan Cohen may launch another GameStop share buyback. With more than $100 million still authorized for repurchases, investors believe Cohen could use a buyback to tighten the share flow and signal confidence in GameStop's future. And so this is obviously a very good news. We know what share buybacks will do. We've seen how it's done. And in general, a share buyback is just the confidence in a company, and it's showing how healthy of a cash pile that they have. But this goes back to what I was saying earlier in terms of why shorts feel the need to suppress AMC so it can't raise money. You can see for GME how having an extremely healthy cash pile will allow them to do multiple things. We've seen their investments in Bitcoin, we've seen how that's doing, and now we've also can look at how they could do the potential share buybacks. Now, a big reason for why share buybacks is deadly for the short sellers is because it tightens the share flow. And so it puts short sellers at an even bigger illiquidity issue. And so the reason why they need to suppress AMC is because we know that a big reason for why GME was able to get this big of a cash pile in the first place. Remember, 100 million isn't what they all have. They have, of course, in the billions. But a big reason for why they were able to do that was because they did share offering when GME was at a high price. So the short sellers seeing how well GME were able to operate with that, and that's why they constantly suppress AMC, because they understand that if AMC were to also able to do the same, then that will put them at an even better position. The reason why I say this is because GME, whilst they raised a lot of money and they're obviously collecting very good interest and they've done and made good investments such as the Bitcoin purchases, they do not yet have an extremely good business operation like AMC does. And we can talk about this, and once again, it isn't a competition. We talked about how there are pros and cons in both companies. One, of course, being GME has more money, so they can do more things. But AMC, whilst having less money, they have already made and refined their operations. And so we can understand that if AMC were to be in the same position and that they had billions of dollars, they could make investments, in which we've seen how it's already performed. They could pay back their debt, which we know will be an even better thing. And then they can also do share buybacks and, of course, dividend issuings on top of reinvesting in the current infrastructures. So you can see how even having more cash, $100 million, and if AMC were to see a higher price and do a share offering and raise $100 million, how that would affect AMC. And so this is why we're seeing the shorts constantly suppress AMC, is because they realize just how much AMC can have, how much power they can emit when they have the ability to do this. And so it's why we're always faced with constant suppression. And then you can see along with this GME, we're saying Wedbush trying to downplay GME, but interesting to note what SEC said about Wedbush in 2014. So we talked about this article in terms of saying how Wedbush is dropping their coverage of GameStop shares, leaving the retailer without a Wall Street rating as it continues to defy traditional analysis. Now, another word you can look at this is the fact that they aren't able to continuously talk bad about a company that is showing very good promises, that is making these institutions losing hundreds and billions of dollars, and so they're not covering it anymore because they can't have their track record look that bad, despite the fact we're seeing how Wedbush is spoofing AMC, and this is the thing that they're doing. Now, very interesting thing about this is that in 2014, Wedbush, and this was made by the SEC's enforcement director, has said that Wedbush clients engaged in a variety of illegal behavior, including wash trades and violations of short selling rules. So you can see what company Wedbush is, and the very fact they're stopping and stepping away from GME should tell you that the tactics that they've used throughout the last decade and even longer than that is clearly not working on stocks like AMC and GME, hence why there's a traditional analysis, and that's why they're afraid of what's happening. As always, none of this is financial advice, so do take cards are going to consult. Make sure to do your own due diligence and research, and I'll catch you guys next time.